The Canadian finance minister just dropped a bombshell. The capital gains tax hike is now delayed until January 1st, 2026. This tax hike, which raised the inclusion rate of capital gains from 50% to 66.67%, was introduced in June of 2024, but it's now facing legal and political challenges that could stop it altogether. Conservative leader Pierre has vowed to repeal the tax if elected, but with obstacles piling up in this new deferral, he might not even have to. And adding to the uncertainty, US President Donald Trump has imposed new tariffs on imports from Canada. This latest trade dispute puts even more pressure on the Canadian economy, making the capital gains tax hike even less likely. With businesses and investors already bracing for economic fallout, the government may have to prioritize defending Canadian industries over pushing through an unpopular tax increase. The Canadian Taxpayers Federation is also taking the government to court, arguing that the CRA has no legal basis to collect a higher tax since the legislation was never officially passed. If the courts side against the government, the increase could be struck down even before the next election. Meanwhile, support within the Liberal Party is crumbling. Chrystia Freeland, the former finance minister who first introduced the change, now says she'd scrap it if she becomes Liberal leader. Other leadership candidates are distancing themselves from the policy as well. With the latest deferral, court battles, and political shifts, the odds of this tax increase never taking effect are growing. But nothing is set in stone yet, and the new capital gains could still become a reality. So with all this being said, what should investors, business owners, and retirees do now in Canada? In this video, I'll break down the latest developments and how you should prepare. Pierre Poilievre's stance and election odds. Poilievre has called this tax hike a direct attack on investors, business owners, and retirees, arguing that it hurts investments, slows business growth, and makes Canada less competitive on the world stage. He has promised to reverse it if elected. But exactly how likely is a Poilievre victory? Well, I'm not a political expert, so instead of guessing, I looked at betting markets, which tend to be somewhat accurate at predicting elections. For example, in the 2024 US presidential election, as you likely know, former President Donald Trump defeated Vice President Kamala Harris. Leading up to the election, several betting platforms had shown Trump as the favorite, with odds reflecting a higher probability of his victory. For instance, Polymarket had displayed a 65% chance of a Trump win prior to the election. Currently, Poilievre's Conservative Party has a staggering minus 2,000 odds to win, meaning he has around a 95% chance of victory in Canada. The next federal election for Canadians is set for October 20, 2025, so it's possible that the tax changes could be reversed before the end of this year. With odds this strong, a Conservative victory seems highly likely, making a tax reversal also highly likely. However, given the court challenges and internal Liberal divisions, again, this tax hike could be overturned before Poilievre even takes office. And before we continue, if tax savings are on your mind, check out our guide on 7 powerful income splitting strategies to legally reduce your tax bill. You can get your free guide on our website, link is in the description. Let's talk about if Canada even should reverse the new capital gains tax hike. Well, let's look at the key reasons for and against rolling back the tax hike. Reasons against the reversal are revenue loss. The tax was expected to generate about $17 billion over 5 years for housing, dental care, and pharmacare. Reversing it means the government must find new revenue or perhaps cut spending. Another argument is that it is a tax on the wealthy or business owners. The Liberals frame this as a way to make wealthier Canadians pay more. A rollback could be seen as benefiting the top 1%, making it politically risky. Now let's talk about the reasons for reversal. Number one is that it will likely hurt business growth. Higher capital gains taxes discourage investments, slow business exits, and limits reinvestments in Canada. Then, as I mentioned earlier, you have your US tariff threats. With these new threats, this could push businesses and investments south even more, so we don't need another tax on top of it to exacerbate it. We already have high business costs, and with high corporate tax rates, regulations, and labor costs already very strong in Canada, this tax increase adds another burden, making it harder for companies to grow, sell, or reinvest. Let's talk about potential scenarios and outcomes. The future of the capital gains tax depends on both legal and political developments. Here are 3 possible outcomes. The best case scenario is full reversal through the courts or a new government. If the judicial review succeeds, the courts could block the CRA from enforcing the higher inclusion rate, effectively reversing the tax hike before the next election. If Poilievre wins and follows through on his promise, the inclusion rate would likely return to 50% for everyone. This would benefit investors, business owners, and retirees. The second scenario is a middle ground, which is a partial rollback or a temporary freeze. In this instance, if Poilievre, for example, if he is elected, might lower the inclusion rate, but not all the way back to 50%, applying different rules for, say, corporations versus individuals. And also, if a new liberal leader distances themselves from the tax, they might reduce the inclusion rate slightly, but not restore it fully back to 50%. Then we have our third scenario, which is the worst case, and there is no reversal at all, and the legal challenges fail. If the courts rule in favor of the government, the CRA will continue collecting at the higher rate, and the inclusion increase will remain. Also, if Poilievre wins but actually doesn't follow through on his promise due to things like economic pressures or competing priorities, the tax will stay in place. And if by some very long shot the Liberals remain in power, a reversal might be off the table. In that case, businesses and investors will have to adjust to the new tax reality and plan accordingly. While a full reversal is highly likely, investors and business owners should prepare for multiple outcomes, especially since legal battles and political promises don't always translate into quick policy changes. With that being said, given the widespread opposition to capital gains tax increase and the multiple legal and political challenges it faces, plus on top of this the new deferral to January 1st and the Trump tariffs, I'd estimate an 80% chance of a full reversal, a 5% chance of a partial rollback, and a 15% chance that the tax remains unchanged. So what should investors and business owners do? Since this tax is highly likely to be reversed, the best approach is to prepare for all scenarios. Start by staying informed. Keep track of court rulings, political shifts, and election timelines. Any reversal will likely take some time. Next, use tax-efficient strategies. Protect your wealth by maximizing your TFSAs, RSPs, and corporate structures to reduce taxable capital gains. And then plan for multiple outcomes. If you're, for example, selling a business or other assets or real estate, consider whether to sell now just in case they do decide to go forward with the tax in the next year. Between court battles, political infighting, and a possible Poilievre victory, this tax hike is on shaky grounds. That said, nothing is guaranteed, so investors and business owners should plan strategically to protect their wealth, just in case this tax sticks around longer than expected. Tax changes can be unpredictable, but your financial strategy shouldn't be. At Blueprint Financial, we specialize in helping investors, business owners, and retirees minimize taxes and build a solid financial future. If you want expert guidance, visit our website to book a strategy call with our team. Don't leave your financial future up to government decisions. Plan ahead, save money, and secure your wealth. And if you're looking for other ways to reduce your taxes in Canada, check out our video on how to legally pay less taxes. You won't want to miss out on these strategies. Oh, and if you found this video helpful, please hit like, subscribe, and drop a comment below. I'd love to hear your thoughts.